The best entrepreneurs and the best companies in Bitcoin don't even exist yet. And the reason why is because the best entrepreneurs haven't even heard of Bitcoin yet. And if you really think about it, that sounds crazy until you realize, well, if we still have so much way to go, that means more people need to adopt it and buy it. And that means there's more awareness, and the more awareness draws out the best people. And those people will solve all these problems that have naturally been the problems that we don't even know exist. Liquidity drowns out all soundness in a business. So when somebody raises a bunch of money in the traditional world, they have to just start thinking about deploying it. And like an easy example is if me and you try to start a business and we had $1 million or $100 million, objectively, we would create a better business with $1 million and $100 million.
Yes.
And so all these founders literally got hung without knowing it because they brought all this money on. And so they're trying to either amplify the token, or they're already comfortable because they made their money and they've already exited. They've killed themselves before knowing it, effectively.
The less money you have, the more creative and objective and conscious you have to be about how you gather information, how you unpack that information, analyze it, and how you make a decision based on what the information tells you.
I think the real metric and the KPI that like the early writers and I want to be thinking more about is Bitcoin per employee. So the amount of revenue a company can make from an efficiency perspective, because that's the real like metric in my mind of the economic output and value delivered per employee, the proxy of the amount of Bitcoin you generate.
Last week, I heard someone say, like, if you win the rat race, you're still a rat. So you have to get like out of the entire race.
Hey there, I want to ask you for a quick favor. Over the past few months, I've had over 50,000 returning viewers and listeners to this podcast, but over 70% of you haven't subscribed yet. So if you enjoy my content, please subscribe on YouTube or follow me on your favorite podcasting app to help me fuel the algorithm and spread the word on Bitcoin even further. I want to thank you for joining me on this journey. I really appreciate your support. Now let's get back to the conversation.
Michael Tanguma, welcome to Bitcoin for Millennials.
Thank you. Graham Constantine, the orange pill savant.
I don't know. You cannot really orange pill someone else, right? But it's more like getting them to the stage where they are like, damn, okay, I need to research this.
It sounds like you're perfecting it based on the conversation before jumping on. I'm kind of excited. I almost want to, I think there's a level of patience that's needed to do what you were describing, because you ultimately know where it goes, but you have to hold back enough to let them answer and then come back with it. I don't have that.
It's funny because I do think it's like an ego thing. Like, I want to be right. I want them to know that I'm right. So they need to see it or something like that. But yeah, no, I think it's fun. I think it's fun when you see like the light bulb go off, as you also mentioned just before, like that like when it clicks for someone, I think that's a really cool moment. I can't really retrace where it really clicked for me.
Where did it really click for you? The closest that you remember.
Yeah, I shared the story a lot, but when I worked in a big bank and my colleague, and I was into Bitcoin, I had a mortgage, etc. And I had a colleague who told me, did you know the money in the bank is not yours and it's not real and it's just a number in a database. And then he explained to me fractional reserve banking, and I walked away from that lunch feeling like an idiot, being like, okay, I'm participating in a system that I really don't understand. And then once I understood Bitcoin, I was like, I can just move the economic energy that I gathered in this flawed system to a provably better system. Wow. Okay. That's basically when I went all in. Like, you can just leave. That's what Jeff Booth says, right? Like, you can leave to the other system. You can do that right now. So once I realized that was a big one. Yeah.
Were you predisposed, like when you were younger? I feel like there's a subset of millennials that were always on like Wikipedia when that was coming about, and you're just learning about things that were taboo that we're finding out are all true.
But yes, 100%. I had the anarchy cookbook, like I made the tennis ball bombs, like stuff like that. I had that. I actually had a big like a Napster and CD like business. So I had like 3 of these towers with CD burners, and I would sell mixtapes in school and games. I don't know if you remember Twilight. Twilight. There was like these illegal games where like I always had like the first GTA and stuff like that.
Yeah.
So, yeah. I always just was on the internet into rabbit holes. Yeah.
I think there's a confluence of somebody's background that was that. If you remember like dial up and you would log into like LimeWire to download and leave it on overnight so it could burn the CD. Like,
yes.
All of these things, and distrust and like craziness of 08 and September 11, all these things like combine. And it's your point. you hear about this thing that's outside of the system, and then you find out there's only 21 million. And if you already have that predisposition, you're like, okay, there's some value here. Now let me underwrite, like, what's the total?
Yeah.
It just happens to be everything.
And also just being a practitioner, like trying out products, trying out new apps or whatever. Like, you can only really create an opinion about something, I think, when you really did the work to try to understand it or use it, basically. Like, I remember in my early days, I was looking at like blockchain info screen, something, when we did like transaction, I was like, what am I looking at? What is this? Like, what, it really felt like the Matrix, basically. And I remember, and I think that's a fun memory, when, text messaging, like SMS, came around. I think it was like 11 or something. And we were always like playing soccer on the field, and we had like two goals and like, 50 meters in between. And we would use to send texts to each other. And we would imagine that there was like this invisible package with a message just flying across the field and like landing in the other person's phone. And then you could like unpack it and read the message. And I felt a similar feeling when I did like my first Bitcoin transactions, and seeing that go and seeing the data like change. And then when you had to block, like you saw like your transaction in that, etc. Like that. Yeah, it's that same feeling, like that you really know that this is a crazy new thing. Yeah.
That's fascinating. So you came more from the tech side. Like, where would you say
in the beginning? Yeah.
So you would say that's higher than like Bitcoin Standard. Like, I would imagine Bitcoin Standard had an impact, but like in my experience, it was the like understanding why it would make sense, right? Like the technology is one thing, but understanding the like from a base level how everything was broken, then you can reconstruct how this could fix it.
I think that is the real orange pill, is when you realize that, like, the reason of existence, right? Like, why I always said, and you have experience with startups too, like, if you can create anything, and now with AI nowadays, like, you can literally create any idea that you have, you can turn that into, a product, whatever the product is. But the reason that you can create anything doesn't mean you should. So you have to figure out, when you have an idea, like, what is the reason of existence? Why can this concept or product or service, like, why is this allowed to exist? And I think once you realize that the money is broken, and have like a broader context of not only why that is, but what the effects are on you as an individual and a society, I think then you really get a picture of why something like Bitcoin should exist. And then I think the next step is to study, well, what Bitcoin then is, and why it is the only thing that can solve that. At least that's what we are convinced about right now. But yeah, seeing the problem first.
Yeah, I mean, that ties into like jumping ahead of like the current state, this feeling. I think a lot of individuals in the Bitcoin space feel like we're in the middle of a great renaissance, what's happening, and where I feel like it viscerally daily is the people that reach out. This has happened since back in the day when I was working at like Unchained, and the people we hired. It's always been this beautiful like thought to help somebody come from the legacy system. And they know once they see it, it's almost like they're dying a little inside because they're building something that they know won't exist in the future, and helping them break out of that. But that's increased, in proportion to like Bitcoin's price exposure, and the caliber of people and those individuals coming in is that version of what you're describing of like, okay, so now like all this stuff wasn't real. It has this baked in margin of fat and like incongruence of the world and all the like cancer, the manifestations from it. And now people have the wealth to effectively like leave, right? Because you have your family and life and all the things tied to it, but you can like take those golden handcuffs off. And so with this recent election and a lot of the stuff and the price appreciation, you just unlock more of that like capital to be able to go and build and affect change. Because even if you have the good ideas, if you're stuck with your family not being able to eat, or you not knowing in 12 months if your startup or idea doesn't make it, are you actually going to be able to do it? You just kind of stay put, because that's what you have to do as like a human and a man with responsibility. But now with this optionality, it's going to be an exciting like next 10 years.
Yeah. Well, yeah. In general, I think that until 2033, when 99% of Bitcoin are mined, this is, as Michael Saylor says, the Bitcoin gold rush. But I agree with what you said, like I think the entire goal of trying to provide value right now and get rewarded for that is to save that value towards the future to do, whatever you would want to do in the future, build a family or build a house or try a venture or whatever. And basically I kind of frame it now like this is kind of like to lower the uncertainty towards the future. So you can actually add some uncertainty with certain risk that you take. For example, having a baby or moving somewhere else or getting married or getting a new job or trying a new venture, right? Like any of those things increases your uncertainty towards the future. But if you already lowered it because you save in a better money, then you actually create that time and space to do more risky things in, I would say, like a conscious way, as compared to, how people are driven towards becoming an investor because they cannot save in normal or in the fiat money anymore. I think the things that people are doing there or, trying to invest in whatever are not really taken in a conscious way. So I think, I don't know if we want to take this exit, but that's for me where it gets like more like a spiritual type thing. Like, it literally frees your mind to do the things that are important in your life, or at least be conscious about doing those things or making those decisions.
Are you looking to save in Bitcoin for your retirement? Meet Onramp, the leader in Bitcoin financial services. Onramp has just launched the industry's first Bitcoin IRA with multi-institution custody. That means unparalleled support, transparency, and peace of mind for your retirement. With Onramp, you can verify your assets directly on-chain and protect them with the support of 3 independent institutions, eliminating the risks of a single point of failure. Are you ready to take control of your Bitcoin retirement? Visit the link below or go to onrampbitcoin.com to learn more about Onramp's Bitcoin IRA.
And this is an important topic because this will be a very polarizing statement, but Bitcoin's not meant to be saved or hoarded. So there's a really great book. It's been transformational. Anybody that's ever started a business from the middle of building a business, Henry Ford has his autobiography, and it's effectively the scientific method to how to start a business. And his big thing is the biggest sin is misuse of time, misuse of capital, misuse of humans. And he references the first order of savings is effectively you save and then you invest in your education or yourself. Right. So you take that money and then you go and learn and you get skill sets. And then you take that to go further that, because to your point, that's where it goes is we're all put here to do something. It's not meant to just put it in a, cave and then save it and watch it. And this is a big thing that happens, I think, within the Bitcoin community of spending Bitcoin and all these things. It's everyone has their own kind of I don't call it hurdle rate, but their own inflection point of when they need to spend and what are the things that they value. And part of that is once you get to a certain comfortability point, you want to do other things in the world and you want to give back. And that's what money's for, to that optionality point. It's easier said than done, right? A lot of people aren't in that fortunate position, but I think everyone, as they adopt Bitcoin, it gives them that optionality and they start to realize, oh, wait, maybe I should actually start putting this capital to use, because it has this funny thing of actually turning into more capital if you're being sure to what you should be doing with it.
Yes. Yeah. I think that what Ford says is, how I translate that is be conscious with your money, right? And that would be good advice if the money was good as well, right? So if the money is very hard and therefore very scarce, right, or hard to obtain, you have to deliver real value to obtain it, then, well, there should also be real value or a super conscious decision about what you eventually spend it on. And I think that's how I would translate that. And that's basically what he's saying. How do you become sure about about taking an unsure decision, right? Because every decision is eventually has risk attached to it. So that's how I kind of approach it also with startups or ideas. Okay, how do I lower the uncertainty before I can make the conscious decision whether to continue with this, what I'm doing, or stop with this, what I'm doing, right? Because you don't want to waste time either. So you want to stop on time if it's a bad idea or concept or something that shouldn't be alive, basically. Yeah.
And the beauty is if you fail, you still win. You learn something. That's the thing. You still you at least know how it would have ended up. It's the think that's what eats at a lot of people when you see a lot of this like lack of hope and stuff, is you never get to actually realize or take the opportunity because you're worried about, you don't have any form of optionality.
Yeah. Well, I have a fun example that I think is also a good bridge to, I want to talk about the difference between Bitcoin and crypto, but I think to add one more thing before, I think it would actually be a really good thing. Like think about if we are on a hard money standard and we can create or lower the uncertainty towards the future so we can try something, right? Like try a venture, for example. What if there is a society where it actually feels great to fail at a business, right? Or where there's actually space and time to fail at a business? Like how freeing is that thought? Because as you said, there's so many people that have, like there's so many ghost or zombie companies, right? Like there's so many people that suffer from, what's that called? Sunk cost fallacy, right? Like,
Yeah.
Continuing with a business or a certain, activity feels less bad or harmful or however you want to describe that, than actually quitting it. Whereas, if you quit, as you said, like you always learn something. But imagine if you have the opportunity to actually fail. How great is that? Because if you know you have the opportunity to fail, you will also be more conscious about taking the opportunity. Whereas like nowadays, if you invest in a business and it doesn't really do well, what do you do if you actually call it quits? Like where are you at then, right? Like how would you structure your life, etc. Like, so it doesn't feel good to fail, although I think we can argue that it would be good to fail, right? But just nowadays on this money, failing is actually almost not an option.
Going back to the polarizing statements, quitting is actually noble. People often think that quitting, to your point, you're kind of like, you should stick with it or whatever. It's like, goes back to the misuse. Annie Duke, she's a famous poker player. She has a book titled something about thinking about walking away. It's ultimately the sunk cost fallacy that we get tied in. Similar to like, there's a lot of examples. It could easily be you got your degree and you're in debt and now you're in the job and you're like, I did all of this.
I got to be a dentist. Yeah, I got to be a dentist.
Yeah. And I think that is like ultimately, there's a lot of like intertwinings with these concepts and like people grokking or understanding Bitcoin, because I'm sure you're familiar with the poker players and Bitcoiners. Like there's kind of that tying in. It's even rumored, I don't know if it's true, I've never looked, about like the first implementation ever had like a terminal or some kind of like poker embedded into the code of Bitcoin.
Cool.
But point being is like, it's all like pot odds and probabilities. And so you are ultimately quitting the system. You're quitting everything that you were taught and learned faster than the sunk cost. Because this is what happens with TradFi individuals and people that have been built their whole lives and all their pensions and all their things to this world. And these were like hedge funds, familiar with a lot of like notable guys that could have got in at 3K, 300, whatever. And you'll hear them screeching at 90K, why China? And all these people are behind it because they literally can't get behind the sunk cost, that they missed it. And now they have to buy it at a higher point. It's incredible.
Very funny. Admit that you were wrong, right? Like fail in your belief could actually be a good thing when we talk about Bitcoin, right? Like, because there's not a lot of people that want to admit that they are wrong about, well, general understanding of money or general understanding of investing, general understanding of Bitcoin. Like you still see mainstream experts, air quotes, talk about that they don't. I think yesterday there was a clip that went viral from like MSNBC or something like, and it said, Bitcoin is worthless. And someone said, well, when was this recorded? And someone replied, well, yesterday. And I'm like, what? Like how? If you're like the finance expert and you don't understand Bitcoin, you're not a finance expert. Like this is the biggest discovery or invention and discovery in your entire field of work. So how can you fade this, right? And I think what really opens up your mind when you're into Bitcoin is when you see people like that talk nonsense about Bitcoin, where you, just a humble pleb, know more about this subject than this so-called expert person. And then you think like, okay, but what about the other experts?
Yeah, I mean, before we switch, like I think there's an interesting thing you just made me think of in the sense of like conspiracy theorists. There's all this stuff on conspiracy theorists and bring stuff up, and everybody's on varying degree of this, of like whether it's the food, the government, the money. and people start to label, and this notion grows of being a conspiracy theorist or being conspiratorial. And the only reason it exists or this thing exists is because the internet now allows all this information. So before you used to get, a couple pieces of information from the news or whatever. But what that I think that's like all obvious or known. But what that reminded me of is how Bitcoin's this ultimate canary in the coal mine. We talked about it on the last trade yesterday, or the pod that came out today about the election results and everybody watching either poly market, but even like Bitcoin was the move first, and then poly market started to move behind Bitcoin's price. And it's known as like this canary in the coal mine when there's geopolitical risk, when there's liquidity crunches, and it goes. But Bitcoin's a canary in a lot of respects. And in one of them is this notion of the unwinding of everything that wasn't true. Right? To your point, because everyone can't get it because it basically starts to tear down everything that's been broken, like that's been built up for somebody's frame of reference in the world. And all of those things actually, independent of Bitcoin, were false and are coming to light because the internet exists. And so now you have this open architecture to learn anything. So everyone that ties in is like, everything's conspiratorial. It's like, if anybody's stuck there, it's like, no, it's not conspiratorial. We just have now the information to get it all out there. And that's why it feels like it, because a lot of people are still at heads in the sand and learning about, the food in the same way their heads in the sand about learning about the money.
Yeah. Yeah. And I think an interesting thought is like, for how many people will the crown price of Bitcoin, right? Let's say the demonetization of gold or the passing of gold. For how many people do you think that will be like the final wake up call and be like, oh, this Bitcoin thing is actually a thing? I think it's going to be for over 50% of the people, probably, that it takes such a long time for them to realize that something new has come along that is just verifiably and provably better than something that existed for a very long time already, that they are invested in to some degree, even if it's just belief or actually holding a lot of gold. I don't think that really matters, but eventually even if you're provably better, you still battle a certain narrative, right? You battle, you probably also grew up with the notion that, if you want to hold something valuable, get gold and silver, right? Like that's what you've been taught and that's what you think. But when you look at it from a numbers perspective now, people should actually change the narrative and say it's gold, Bitcoin, and silver, because all the Bitcoin is worth more than the silver now. So you cannot ignore the fact that Bitcoin is worth more than silver. So you have to adjust the narrative, but that just takes a really, really long time. So I think that is where also the current kind of like information arbitrage comes from. So if you do the work now and you challenge your mind and your beliefs, whether you're conscious about them or not, to grok Bitcoin, you can have a lot of value from that, just because you are in fact still early 15, 16 years in.
The solace I find in all of that is that it's happening exactly to a T how it's supposed to, meaning the people that were closest to the money that don't get it, or the people that are going to not suffer, because I don't think they're going to suffer from a monetary perspective, but it is the greatest wealth transfer. And it's not from the boomers to this, it's from the people that shouldn't have had money to the people that get it. And that goes into learning, being first principles thinker, thinking about it, because getting Bitcoin or seeing a little bit is very fundamentally different than like putting the majority of your capital and then building to that world, because those are the people that are going to reap the benefits. It was a thought. A lot of people will talk about risk adjusted. This is the best time to buy Bitcoin. And that's absolutely true. You hear that a lot from people building in the space, because they get to see a lot of the infrastructure behind the scenes, who's coming in, but also risk adjusted. I think you sparked this thought from our conversation yesterday, that for our friends and your friends specifically, because I don't know that many non-Bitcoiners, it sounds like you know a lot of tech people that don't have Bitcoin, is there's actually no better time that I would say for them to get into Bitcoin today. Not because obviously they have to buy higher, but those are the killers that need existing world that will be able to rebuild or build the things that this new world is going to need. And that Bitcoin's going to float up. It's going to go into their hands if they know what they're doing, because they're going to be building the things that we need in this new economy. And that didn't exist before. So somebody that bought Bitcoin in 2013 or 14, while they may have a nice stack, that stack's, it's probably going to go into the other people's hands. Like they're just not going to hold it. Yeah, they're just going to hold it. It's going to go. So from a net new person, people think they missed it. But if somebody wants to be entrepreneurial, this is the best time not only to buy, but to also build, because all the price appreciation is going to unlock that Bitcoin. Because again,
Very
people
good
have
point.
natural
Yes.
needs. Yeah.
Yeah. I think that's a very interesting point. I never thought about that, but I agree. I mean, it's like the when people talk about big tech or like a Silicon Valley startup, it's if you join as number 12 or 20 on a rocket ship company, you still do very well, right? But you weren't that early, and you weren't taking risk when there was just an idea in a garage, right? So yeah, for certain people, different levels of risk are acceptable. Whether they can be argued or not to be valid, that doesn't really matter. I think that's a personal interpretation, right? The risk, I generally think about myself. I'm a pretty risk averse person, but I'm pretty much all into Bitcoin. Took me a while to get there, right? But yeah, it's just I need different information or different experiences. Trading away my Bitcoin, for example, is an interesting experience. Spending the Bitcoin on, for example, headphones that are now broken that have been like $15,000 or something. Like you have to get certain information from actions or study that help you lower your level of uncertainty, and that's all a personal perception. How much uncertainty can you bear in order, or certainty do you need in order to move into something? And being early doesn't necessarily mean that you will get benefits from it over the long run, as you say. I think you're totally right, because you can stack and save, but if you stack and save and build on top, you will probably get more from this new technological development in that sense.
Yeah. It doesn't get talked about enough. Just building in the space, I've seen it, that the early individuals coming in, if you think about it, like to see something so crazy like this, imagine being in 2010, 11, 12, 13, 14, all alone on an island. To see that means there's already like wires that are different. But then to get that, and that's where you hear all the not your keys and all these like dogmatic things that people adopt, and they help because they're good to think through, but they never go back to the first principle of like, well, why does this exist? And are there different ways? Because ultimately, like, the commercialization of this asset class, for better or worse, will happen. And you have to think, what are right from first principles, like how do I protect counterparty risk and all those things? But then you have to also think about how do you bring in people? And it's an interesting dynamic that doesn't get talked about, where everyone, it's this belief, okay, well, not your keys, not your coins. Like, this is just an example. There's a lot, but nobody like the 12 words, right? 12 words is very easy. You right now, 12 words, $10, $100. Tell somebody 12 words in a hardware device for all your net worth. That becomes impossible. It becomes untenable. Tell somebody about FTX, BlockFi, Celsius, all the things that blew up, becomes untenable. So you have to build solutions that bring people in that may not be exactly what you interpreted to be the end state, but at the same time, it's literally what kept people out. Because they're scared shitless of like having a hardware device in the UK or North Koreans taking it. And these are like concepts that somebody from 2012 or 13 would just like dogmatically be like, no, there's no way, because they can't like tie those points. Not everyone, but it's just like, it's just part of like what I've seen just building this space. And then there's others that grok it and see it. And so there's just like, that's why I've been the most excited about this 100K appreciation phase. Cause I used to get in trouble a lot and saying, the best entrepreneurs and the best companies in Bitcoin don't even exist yet. And the reason why is because the best entrepreneurs haven't even heard of Bitcoin yet. And if you really think about it, that sounds crazy until you realize, well, if we still have so much way to go, that means more people need to adopt it and buy it. And that means there's more awareness, and the more awareness draws out the best people. And those people will solve all these problems that have naturally been the problems that we don't even know exist yet, right? With like financial products, insurance, everything that just needs to be in a traditional like economy. And so, yeah.
So how do you approach or explain the difference between Bitcoin and crypto then? I mean, like if you are interested, I mean, I had my shitcoin phase and ICOs and NFTs and stuff like that, just because, as I said before, like I am a practitioner in that sense. Like I want to try that stuff out, right? Like it's new technology. People are apparently working on it, enthusiastic. So, of course I got into broader crypto as well. But I owe you the story that I wanted to tell, but I'll add that when you shared your thoughts on like, how do you discern those two?
Yeah. So, the wild card, like the Bitcoiner, kind of think of us as rationalists now. We got to like get out of the phase of like labeling Bitcoiner, because a lot of wealthy people do not want to be called Bitcoiner. But what I generally anchor to is when we talk to institutional investors or individuals, is not to disparage or to demean or to say that crypto is all garbage and that it's all going to zero and all those things. It's effectively, but I do believe that. But you got to meet people where they're at, and you can't meet people where they're at by saying the dollar is going to zero and all their investments are going to zero, because they just don't want to hear that. Nobody wants to hear that about their investments, or that they insinuate you're closed-minded if you just say that it's all crap and you have the one thing that can be valuable. So one of the things we've anchored to, and there's a lot of different tactics, but one is just putting crypto as a venture bet. So think about crypto as venture, and venture, everyone knows, well, at least the existing venture, we can talk about that if you want, but venture knows that majority of bets go to zero, right? So 90% or zero, but you have some high upside. So maybe you get lucky. Think about that for your portfolio or how you allocate a percentage. And then think about Bitcoin as a store of value, whether it's bonds, gold, real estate, something that it will increase your purchasing power, and and you want material allocation to, not 1-2%, because that's how a majority of institutional investors look at this sector as it's high risk, and so they don't even care about the custody, which is what our firm works on. It's high risk, and we had to learn this the hard way, because we go pitching all the stuff we do, and they're like, wait, I don't care about what you do, because this is a risky asset. I'm good with leaving it on a risky way on Coinbase.
Yeah.
So anyway, I think that's like as best in a diplomatic way of saying it. But, between us, obviously it's all this stuff's going to zero.
Quick question. If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and that's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
Yeah. I am to tie it back into the failure part that we talked about and this crypto question. I'll share an attempt that I had at a startup. I think it's about 3-ish years ago or something. When I had an idea to create a startup in the crypto space, basically like a bounty platform for early user feedback. So if you were building like a product and you need to talk to early adopters, I thought, well, all the crypto people are early adopters in a sense. So if you can create a bounty platform where you can say like, try out my beta app and do these things and give me feedback, and then you earn, I don't know, 20 or 50 USDC or something like that. So conceptually, I still think it's an okay idea. Well, so we set out to work on that. So me and a co-founder. But upfront, we decided, okay, we're going to try this for 6 months. These are our milestones, or how we are going to gather information to see if we can, lower the uncertainty and get to a point where we can, consciously decide if we should continue or not, right? So we were like, okay, we're going to do 6 months. And I think in the 6 months, I spoke to over 200 like teams building in crypto, founders, investment groups, like these accelerators that had like 50 million, like Polkadot, or the other one, I don't even know. There was one that had like 50 million, and no one had product market fit. No one had real usage. Everyone was focused on their token or their token generation event or initial DEX offering and blah, 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 like all that stuff. And so after 6 months, we had like 40 or 50 of these assignments on this little platform that we built. And so it was nice to see like that kind of work, but we didn't really find a business case, because also, I don't know, I thought the entrepreneurs weren't that savvy or good, and yeah, well, I've worked with lots of entrepreneurs in my life, and I felt like, this is so interesting. Like, this is such a cutting edge, forward space, but there's no one that really surprised me or something, And then after 6 months, we had this moment where we reflected on, okay, but how's it going? Should we continue? And I think we talked for 30 minutes, and my co-founder shared what his thoughts were, and I shared my thoughts, and they were the same. We just shook hands and we're like, okay, we're going to quit, which was great. And afterwards I talked to a lot of people and they said, oh, I think that's actually pretty impressive that you quit, because you were talking about it like very enthusiastically about the idea, etc. I still think it's conceptually a good idea, but people are surprised when you quit. And we were just like, oh, this is great. Like 6 months, we took 6 months, we decided it's not good enough to spend more time and energy on and money, and that's it. And we learned a lot. And one of the big things that I learned was that how I would differentiate like Bitcoin and crypto is just like Bitcoin is discovery of absolute scarcity, and crypto kind of consists. And so, yes, you could say it's a cryptocurrency. Also, people don't really understand when you say like Bitcoin is not crypto, and then people say, but Bitcoin is a cryptocurrency. I always type crypto in like the big and small letters, like crypto, like that. I type it like I said that. But for me, crypto is an attempt by startups or foundations or groups of people to create a system where users do something, right? And where a token gets exchanged either within the system or between the users, that stands for some interaction that happens in the system that they built. And from that usage, the token should actually drive its value, right? So if the system that's created is valuable enough, then the token that's used to exchange information in that system is also valuable. But you see that there's no real systems that have been built that have enough traction to justify the price that's been set on these tokens, because mostly people in crypto are speculating and trading and gambling with the token speculation. There's not many people that talk about the actual value of the systems that are being built. It's just, I wonder what you think, but for me, it's kind of like VC, venture capital 2.0, way quicker, all anonymous, all worldwide, and it's the price of the tokens doesn't justify the value that's being created in the systems that are built. So that's kind of how I differentiate them there.
Well, there's a few things. I think one is, God bless you for going through that. I don't know how many showers you had to take to wash the stench off. Like, I don't know how many conversations I could do hearing about that. Because I would imagine it's probably like Pareto distributed, and like 20% of the founders in good faith believed in what they were doing.
Oh, yes, of course. Yes.
And then the other ones were looking, but like, there's just like an economic fact that it's inefficient to have multiple currencies. It's why the dollar's used. And if you go to Chuck E. Cheese, you buy the token, and then when you leave, it's worthless. And so there's a lot of things to glean from use cases in crypto to see. Like the one that occurs, and it's an investment we're actually looking at, is back in 21. If you remember Stepping, it was like a crypto for like running. It's like ties into that. I think your idea is great. And I think it's a great feedback loop to incentivize individuals to leave proof of work, verified, reviews.
Mm-hmm.
But it's also like the gap is not enough people really want Bitcoin. Maybe there's a growing contingent, but like this notion, if you can have, there's like eCash and all the things that can peg maybe to $1, like this notion that you can just generate, everybody knows the dollar. So if you can generate $1 by this, like that's what everybody recognizes and understand as valuable. And so they're missing the unit. But then the other part is what ties into a lot of the common themes that we talk about. Not a lot of people talk about yet, but it's this notion of liquidity drowns out all soundness in a business. It drowns out all soundness in thought. So when somebody raises a bunch of money in the traditional world, they have to just start thinking about deploying it. And like an easy example is if me and you try to start a business and we had $1 million or $100 million, objectively, we would create a better business with $1 million and $100 million.
Yes.
And so all these founders literally got hung without knowing it because they brought all this money on. And so they're trying to either amplify the token, or they're already comfortable because they made their money and they've already exited. So they already they've killed themselves before knowing it effectively. There's just a few things that I think are happening there that kind of like, even if they had a good idea, they put themselves in a position to never really actually execute on it because of all the things they just said.
I couldn't agree more. I think that ties into what you said or mentioned with the quotes of Henry Ford. Like the less money you have, the more creative and objective and conscious you have to be about how you gather information, how you unpack that information, analyze it, and how you make a decision based on what the information tells you, right? And if you have, 100 million, I would say you can do anything you want to money. Even a million in an early stage startup is almost like you can do anything you want type money. Yeah, that just clouds your judgment, right? And I think you also mentioned before, well, let's say you would have Bitcoin on your balance sheet and that's the only thing that you have. Well, you have to be super conscious about what you spend the hardest money to ever exist on, right? So it forces you to, I'd say make conscious decisions, right? Like it forces you to ignore perverse incentives. Like just having Bitcoin is the opposite of having a perverse incentive, as opposed to having a million or maybe even 100 million in the bank. Like you feel like you have to spend it in order to get to the goals that you pitched to get the 100 million. And I think in general, it just clouds your judgment. And I agree, it kind of hijacks your objectivity.
And that's where I'm like bullish on this Doge, Department of Government Efficiency and strategic reserve and companies on the balance sheet, because whether they like it or not, once you have that unit that increases, that number go up, makes you think twice about everything you do. And so it creates a
anything
feedback
else
loop.
After that. Yes.
Everything after that. And so like the real metric that I'm thinking about, because you hear this like sats per share and all this stuff around the financialization, which is fun to talk about, but I think the real metric and the KPI that like the early writers and I want to be thinking more about is Bitcoin per employee. So the amount of revenue a company can make from an efficiency perspective, because that's the real like metric in my mind of the economic output and value delivered per employee, the proxy of the amount of Bitcoin you generate.
Well, that's a real measure of the productivity of the people in the company then, right?
Exactly. And so like when you think about a government agency, like how much Bitcoin, how much, revenue can they increase, or, from like Department of Government Efficiency, like how much can you save and still, provide the value to an economy per number of people operating that.
Yeah. Well, and then once you have a way to actually measure the value, right, then you can figure out where to cut all the excess fat and non-performing parts of that. Interesting, right? Because these departments got so bloated because so much money was created, and eventually, that's kind of how the government grows, right? Like if you grow the money supply and you see the debasement of the money and the quality go backwards of food and all these things, and more people unhealthy or unhappy, things that need to be fixed within society. That's kind of like an argument to make a government bigger eventually. And they could, because, well, they can create as much money as they can, right? So it doesn't really matter how many, with how many people you prop up the government labor force. Like that could be infinite. Everyone could be working for the government eventually.
This is where like you hear a lot of the thoughts when AI first really started proliferating about there's going to be the first $1 billion founder, like single person. And it's like, I think that's to be true, but the thing they miss, it's going to be a Bitcoiner without a shadow of a doubt, because the only person that's that incentivized, to streamline and leverage every piece of technology to get to the ultimate use of is somebody that would understand from a first principle perspective, that's what they want.
Perhaps it would be an AI using Bitcoin. Well, this is a nice leeway, I think, into the next thing that I wrote down. I think, for the people listening, how would you advise them to look at Bitcoin like over the long term, so that someone is kind of like able to ignore the like short-term noise from social media or mainstream media? I mean, this week we are recording, I have quite a backlog, so I love to say the price, but the price now is 91,250. This week we saw this run up to eventually 93,000 and something, and it goes a bit down again, a bit up, and blah blah. And then you see like mainstream media go from, Bitcoin is 84,000, and then after that they don't say anything, right? Or it's 90,000, and then now it's like, is it over yet? Has the bubble popped? Within 6 days you go from like, Bitcoin is still alive to did the bubble pop, right? And it's very and even on social media you see like the hype and the bullishness go up, and now it's boring again. Yeah, what type of tips do you have there to stay aligned on like kind of like that long-term outlook on Bitcoin?
like we were talking before, I'm like the worst person to talk about any of this stuff because like I just tell everybody to buy everything, like my wife, get her like roll over her tax advantage accounts, my mother-in-law. So like when I tell them the price is moving, like this last time with the, election stuff, it kind of falls on deaf ears because it's like, well, you always tell me to buy. Like I couldn't shame them for not buying before the election because it's like, well, I'm kind of been telling you this for a while now. But to answer like the one thing that I heard from a good friend, Parker Lewis, he would tell me that, or he would tell me, because you get in these conversations, right? A lot where you're trying to explain Bitcoin, you're trying to help people because you can't get over your skis. Like not buying Bitcoin is just as bad as buying too much too early. And we've seen this, 21, a lot of people got burned. So in his frame of reference that he used that I really like is you buy enough where if the price cuts in half, you don't feel like you have to sell. And if the price doubles, you don't feel like you have to sell. Like that's your nice entry point. Because if you do either direction, then that means you're kind of in an uncomfortable spot. And then you naturally go get educated, right? You deepen the conviction, and over time, we all know how it goes. It's a one-way street. So that's like on the entry. And then the other side, I think me and you were talking about, or we talked about on this pod, again, mixed up, was it's like Bitcoin really is. It sounds like a platitude, but it's like it gives people hope. And so the people that think they missed it, like you didn't miss anything. You just found a new form of money to increase your purchasing power. So now you have hope because there's a lot of people that are on the rat race. And so now you can just save in this thing and get out of whatever spot you're in over time. It takes time, but that's what money was supposed to be, is giving you like to the point we talked about optionality. So just think about it, that you didn't miss the boat. This is your store value. You save a little bit. This is going to what's the term? Bitcoin, a get rich slow scheme dressed up as a get rich quick scheme.
Yes. Yeah. Well, I love that last part. I also love last week I heard someone say like, if you win the rat race, you're still a rat. So you have to get like out of the entire race. I think that's
this is like the thing with Bitcoin is like, it's that whole notion on Twitter's like, you got to become ungovernable. It's like, you just got to become, it's the truest sense of the SU money, in the sense of not like you tell everybody SU, it's just like you don't care anymore. It's like you can't be canceled because if they don't like it or the people don't like it,
I just walk away.
You just walk away. And historically, you couldn't do that because, this whole cancel culture, you can't get a job, you can't do it. It's like, well, people can naturally, and that's where like, I think the truest version of the Renaissance is this notion of like Trump being like authentic. We talk about you and, we're a proud sponsor, and a lot of folks come in, and I sometimes ask them, try to understand, well, what do you like about Brom? Because I think of you as like an up and comer in the space and building a great audience. And everything comes back as the authenticity. Like, I think that's what's been missing ultimately, is that people are inauthentic. And so that's where you get like the Trump derangement syndrome. It's like this guy just says what's on his mind. And even though maybe it's not the most polished, his intentions, everything I've heard, and a lot of people personally that know him, everything I've heard is just an absolutely incredible person. But everything the media hears, and then the opposite is like, the craziness, the lizard, they'll say the polished thing, but then behind the scenes, they're the most monstrous things that they do. And the market just like is kind of like in their like lulled like blinders of not recognizing that. And so I think, I think the authenticity is going to be a big like part of this renaissance of people that just like say and do what they say and say what they're going to do, is going to be a resurgence where historically you weren't really incentivized or rewarded for that, basically.
Yeah, I agree. What was that point that you mentioned about what Parker shared again? I had a.
It was the you buy in half and like when the price, you like how much should you buy? Or like,
So what I always say to people, doesn't matter how much their net worth is. Is like, okay, think about your net worth or what you have liquid, right? Or any number that is present for you that you think is your net worth, and think about a percentage or an amount of that amount that you haven't thought about for 3 or 5 years. So let's say, I don't know, you have 200K, right? And you think like, well, I don't know, I haven't thought about 50 of the 100K. Like I will always have 50K or 10K or, whatever the number is for you. Then you should buy that amount of Bitcoin. That's kind of how I always frame.
This is why tax advantage accounts like Bitcoin IRAs, I don't know what they are outside of the US, but like the retirement accounts that are like swept aside.
IRA is when you do it yourself, right? It's like a personal way of building your pension, no?
Exactly. Yeah, for retirement. And they're like tax deferred and different schemes. You have your 401k that you match with your employer. Those are a very easy top of funnel for the market because people just like, it's to your point, it's this like amount of capital that is so far in the distant future that people don't feel like it's theirs. It's not that it's not theirs, but they just are like less likely versus their personal account that sits and they see their checking account or they have to sell another asset. And it's also tax deferred. So you can sell, you don't have taxable event if you sweep out of like X to go into like Bitcoin. It's also where like MicroStrategy has a bunch of, there's an interesting theme. I don't know how much you've heard about this, but there's a lot of guys in our like circles that have been around Bitcoin, call it from like 2022, that they secretly took their wives' IRA accounts because they managed their wives' money or they got successful or they have always been successful. So their wives like retired and they're stay-at-home moms. And I hear this more and more. This was 6 months ago to a year. And I thought it was the funniest thing because I would hear it. And now like I haven't even talked to them because I know they're just like, killing it. But they just like ate their wives' retirement accounts into MicroStrategy without them knowing. And again, it goes back to that because you don't have a taxable event when you sell those assets and you go into this thing that's just completely like ripping.
Yeah. Yeah. Interesting. So again, I think a nice leeway into the next thing I wrote down is, you talk to a lot of wealthy individuals, high net worth individuals and institutions, with Onramp. What are kind of like the challenges you see with these types of people, when you talk about like the long-term value proposition of Bitcoin beyond, the price that people talk about? Yeah. What do you see there? I think, as you just said, like once you get into a conversation when they are like comparing, that becomes really hard because they have to also understand what Bitcoin is to a certain degree, but also why they are holding the other assets that they are holding. Like, do you actually understand what you're holding? I think is sometimes also a relevant question.
Yeah. I mean, the biggest thing is probably the most surprising is we are so early, that at best you're starting at zero information, meaning that they are like agnostic and just have like no sentiment in either direction, positive or negative. But majority of the time it's at worst that it's, they think two things and they're both equally bad. One is it's all a scam, right? Or it's all risky. And so it's all just treated in a risky way. And what happens is at these organizations, that's why we focused a lot. We've been having a lot of meetings on the institutional side because we're going to be more heavily focused there coming into 2025 with the backs of the first UK pensions allocating. And we learned a lot about ultimately it's an individual game. Like Bitcoin's emergent. So we work very much with like high net worth private clients. But then at the same time, those individuals sit at these organizations. And so those are the ones that affect change. And that's how you want to like really attack the market. You don't want to go in and try to educate from 0 to 1. Like you can, but you need that like advocate internally to really stick their necks out. And the problem is that even if they have that individual, they still are scared to bring it up. So like a registered investment advisor, like a big wealth manager, their firm is afraid to even pitch the ETF to their clients because think about that stigma, right? Because they're not going to tell them to go more than 1% to 3% at best. But then now they built this whole book. They're managing hundreds of millions, if not billions of dollars. Imagine doing all of that, building all the credibility. And now you're telling them potentially to buy rat poison. It's a scary, right? Like it's a very scary, daunting thing. So it goes back to the authenticity. Like somebody has to very fundamentally believe it and are willing to be on the right side of history to put their necks out. And that's growing day by day. And so the goal for anybody in this space, like specifically on the institutional side, is you're basically trying to like, I liken it to like shooting off a flare and saying, look, we have the goods, whether it's the advisory side or the actual financial products, we're here. And now we can help you provide air cover to like go through that. Cause it's really the only way to approach it. You'll just hit your head against the wall if you just try to target institutions talking to them about Bitcoin, because they'll tell you like, even if I want an allocation, I'll just go to Coinbase because nobody ever got fired for buying Coinbase, which will also be a problem at some point, but that's a different topic.
Yeah. Yeah, that's a different topic. Okay. So I think we touched upon it a little bit when we talked about, tech founders who could be building in Bitcoin, etc. You have lots of experience in both like tech companies and the Bitcoin space. How do you see kind of like the intersection of those two worlds, like shaping the what you could call like the future of finance. I mean, kind of like my conclusion from that little crypto adventure and seeing people build in that space, also talented people. Like currently, I really think like, wow, I think you should you could find more purpose when you direct your energy and your skills to Bitcoin. I haven't seen a big shift yet, but yeah, how do you kind of like see these two convert?
So I'm absolutely excited about what we're doing at Onramp. Always happy to talk to you about it or anybody. But with that, I think of it's kind of boring in the sense of like we haven't even figured out custody. I think we have, but we haven't figured out custody in Bitcoin yet. That we're still just trying to figure that out. And then there's the financial services and things around it. But to your question, what gets me insanely excited is that exact point of what happens when the smartest, brightest minds realize what we know. And so that's part of like what we do at Early Riders in it's a Bitcoin denominated investment fund. It's the first one, I believe, that exists. But the thing that is exciting, I had like multiple conversations today in relation to this, is what happens when the best people, grok what we're talking about, have the optionality. And the thing that I know that they don't know yet, and some are learning and some do know this, is that you can't really change the organization. You can try, people try, and then but they can't, because you either have to have the sailor, you have to have a leader that's like at the head to change the organization, meaning to buy Bitcoin, to change. And so they hit their head against the wall to a point where they're like, screw it, I'm just going to leave and compete and go out and compete them. Meaning I'm going to build that, because all businesses in a dollar world have a portion of fat. I mean, even in Bitcoin world, right? Like nobody's perfect. You have some flavor of inefficiency and fat. And in a fiat world, it's very inefficient. When you think about like IBM is the greatest example of these dominant companies, but there's still like seeds of value. And so when you, as an individual grok, what we're talking about in Bitcoin, and you look at it and you see, okay, well, now I can use all these deflationary tools and I can incorporate them in a business, and I can start to bring other businesses together. Like from Bitcoin stuff, that's exciting. And, we invest in that and that's cool. But what's more exciting to me is when people grok like the Stripes and all these other things that are built, but have their own component of fat, and are building this like new world with this version of understanding how to build with efficient scale and then integrate Bitcoin into it. And the first example of that is just their balance sheet, right? Because the thing that it's not talked about is, inflationary, like Bitcoin's kind of Darwinistic in the sense that you're asymmetric in the truest sense that to the upside and downside, you're at risk, right? So your personal balance sheet is at risk that if you don't adopt it, you're losing purchasing power, but your business balance sheet is at risk because we're in an inflationary environment no matter what. The math doesn't check out. Like there's too much debt, not enough dollars. So we have to consistently print more dollars to service that debt or everything kind of, falls apart. So because of that, margins compress. So we constantly have to pay more for goods, and then the business has less margins. But you don't have to do that if you have a better form of money, because naturally, while all your competitors are increasing their purchasing price, because increasing your purchasing price means that you also have less buyers because there's less people that can actually afford your goods. But what happens when an entrepreneur takes all the learnings from the company that they were at, all that fat, say I can do it more efficient, I can integrate other like opportunities, I have a better form of money. Now I'm going to go scale it faster. And then I ultimately don't have to like have the margin compression because I don't have to increase my prices like everybody else. And then they can go and actually be opportunistic in purchasing. So that's like the most exciting aspect of that and that's where the firm comes. Early Riders had this realization that Bitcoin, AI, open source tech is so disruptive that the incumbents won't do it, like adopt it or be winners, because they ultimately means that their business is like they have this innovator's dilemma 101. So it's going to be the early riders that come about and have to do it. And that was a clip that you saw. I'm curious, like how you know, the first time you saw it yesterday, and you saw Byworth, eyeballs click. Yeah.
I think so. What you're talking about is a clip. If people go to your X page, they will probably find it somewhere, of Richard Byworth, who I've had on and in 2 previous episodes, actually, where he realizes that by denominating your investment firm basically, or your fund in Bitcoin, and funding startups with Bitcoin, you actually bring back that accountability or that conscious decision making that we talked about before, right? And that is actually an edge, if you explain it well, right? To just basically playing the numbers game with a lot of fiat money and just pumping a lot of money in as many startups as you can. Basically diluting the quality overall, but also, kind of like not incentivizing, as we talked about before, to have these founders make the best decisions that they could make. And by denominating your fund in Bitcoin and funding in Bitcoin, you kind of invite the people, I think, also that understand this, which is just a pitch by itself, by the way, I think, right? Like for you, if you would talk to founders that, if they agree that their funding is something that is absolutely finite, they take on the challenge to be very, very, very objective and very conscious about the decisions that they make when they're growing like their early company. So I think it's a very interesting experiment. I think conceptually, I totally am along. I wonder how it goes in practice, but it should work. I mean, like if you have the right incentives, you will do the right work. Yeah.
The exciting part about a lot of this stuff is a lot of these things sound theoretical, but they came from in practice because it's how we built Onramp. There's a lot of experience coming into this, and we're intentional of building our business on a Bitcoin standard and had the optionality. Like a lot of these concepts we talked into, so we weren't insanely early, but Jesse, who I believe you had on the pod, that's come out, right? Jesse's pod, Creases BTC.
Yeah, definitely.
We made this intentional point of like, seeing ventures, seeing startups, having experience with the liquidity, drowning out all soundness and unit economics. And so we said, well, we should, and also because if you believe you have a big business opportunity, it's this funny paradox of the definition of having something, you don't give it away. So when you see people raise multiple rounds and do this stuff, it's like, well, what are they really doing? OpenAI is the fun one to pick on because they keep raising all this money. It's like, well, what do they have? They have to keep raising the capital. Wouldn't you just build a business and then leverage the, cash flows to build a bigger business? And so that was how this all came about. To your point, it goes back to the authenticity. There's this real, again, flare that's shot out when you put these concepts out there, because RLPs are some of the most fantastic, incredible people in the world, and they're not investors. They're practitioners. They are people that have built, and they see this and they see it's an intellectual investment along with a capital investment because the hurdle rates are denominated in Bitcoin, but they see this as the future, and they know that their businesses and their time and their efforts are going to go there. And the funny part is that Henry Ford book, basically after doing all this, but listening to it, this is fundamentally how things were done forever. It's the past 100 years that are the theoretical or the, right? Very it's true. Like because when you go back to like the main concepts of this idea is that if you are a high net worth individual and a limited partner and you invest in venture, you're holding dollars or you're holding something that you are trying to get rid of because you know that like eventually, this is like venture. Yes. Yeah. And this is like venture 101 when you think about it was meant to be a cottage industry by people that built, and then it turned into this crazy kind of like monstrosity of just everybody goes to school, works at a fund and then starts their own fund. So but because you don't value the dollar, it's implicit. It's not really explicit. You're just like, I don't value it. So like you go and have your allocation of venture because you have your bucket. So then you deploy, and by having a unit that's already inflating away, again, subconsciously, even if it's not conscious, you're less discerning with who do you pick as your manager. So that's the first problem. So then the second problem, as a manager, you're naturally raising dollars. So you have a hammer, and now everything needs to look like a nail. So you're sitting there and you got to just deploy. 2021, anybody has a fund deployed, everybody just like the valuations were absolutely insane. You probably never see returns on that. So everybody brings the dollars in, they have to get the dollars out at the crazy valuations. And then they get what's called style drift, where they ultimately want to raise more funds because that's what they do. They're allocators, not builders. So then it's like, I need to go bigger. I need to go raise more money. And going back to liquidity battle. So you raise more money, but the other part of it is that you give the money to the founder. And then what is the founder supposed to do? Well, they get told, run, spend, which is in my mind proxy for light it on fire. So you see the layoffs, you see getting out ahead because they're telling you got to go do all of this.
Yes.
And so the founder is the ultimate allocator. But if you switch all of that, and we'll go through it all, but you think about from an LP has Bitcoin, so they're more discerning on who's the allocator. The allocator actually has to have built and be building. So then they understand how to like look at, deals and go backwards and understand what the story is and if it's actually valid. Then when you allocate, you're not actually sitting on an inflating unit. So you hold it in a thing that's increasing in purchasing power. So you're more discerning and looking at deals. And then the last part is the entrepreneur is holding a unit that is increasing in purchasing power. It's not to say, again, from the very start of this pod, that you don't spend the money. You spend it on the things that have the opportunity cost to grow, the hurdle rate to grow that business, to make you more of that underlying unit. And you'll hear a lot in the community, Bitcoin's a hurdle rate, but the reality is like a lot of people say it without really recognizing, like, it's like saying, I want a 6-pack. Like everybody can say that's my hurdle rate. It's like having a 6-pack's a different version. And so if you're out there like allocating, having layoffs, doing all these things, like that's not necessarily the hurdle rate. The hurdle rate is actually really recognizing from a first principle perspective, how do you get to Bitcoin positive flow and then build, and those are just like fundamentally different things.
Yeah. No, I think that's a great illustration of aligning incentives, right? From the LPs to you, the allocator, to then the founder that you fund, right? Like from the start, the incentives are aligned. And I think when we talk about fiat money, even before the money gets to the LPs of the allocators, right, of the funds, that money is already debased by the people that came before, right? The banks, the people closest to the money printer, like they have the perverse incentive to spend it because they can spend it before the prices have inflated, right? And that is then the basically the base incentive that permeates along the entire chain of all the other people that then use the fiat money. And I think what you just illustrated shows that, if you know that what you own is the scarcest asset to ever exist, you're going to think 2, 3, 4, or 5 times before you consciously make a decision as to what you spend it on, right? And that invokes, second, third order incentives like after that.
Yeah. And the one big thing that's like the most beautiful out of all that is the notion of constraints breed creativity. It's very hard. It's not easy, but if you make the intentional focus, right? Like we start a business and we say, well, what's the least amount of money to start this? And we purposely do that. And then we say, okay, we have optionality to bring money on, but let's in good faith only bring this money on and try this. We will come up with the most creative ways to spend that, to execute on what we want versus bringing that money on. So when you hear, the amount of capital people raise, you're like, all these things, they're actually negatives. The heuristics and the things that people talk about that were positives in the traditional world, amount of employees and all these things are actually the opposite where we're going.
Of
and that's
real
the kicker. Exactly.
Yeah. It's interesting, right? That like raising money is celebrated and you get your little PR Newswire, TechCrunch, whatever article, but it doesn't mean that you are creating value. So it's interesting. I think it's an interesting topic to explore, and see kind of how the fiat money,
there's a version
affects your judgment, basically.
And there's a version of this I've been thinking about. Is it may be like a little controversial. I don't know it like intimately, but I think a lot of people know how much like the Democratic Party, how much more money they had to lobby, right? Like versus Trump.
Yeah.
And there's a flavor of this. While they're not inherently Bitcoiners, there's a thesis or a theory here, an underlying builder's mentality. Maybe because he's a businessman and the people around him. But this has always been known with Trump since back in 2016 that they run their setups. And Bailey's, I think, tweeted about this a little bit because he has a little bit more intimate knowledge of being involved there. They run like a startup. They're insanely lean. They have like a very small team. They're nimble, right? You saw their social strategy versus like the other side just like blows money. It might have been a money laundering scheme and it's just like the most inefficient use of capital and didn't even get the job done versus this. And like, this is already practically being seen. It's just not on the Bitcoin standard. But yeah, that's what that just reminded me of.
So, do you think there's a point where you can fully understand Bitcoin? I think like in this conversation, we went in a few different directions, but yeah, man, this rabbit hole is so deep. Like, is there a point where you would be truly enlightened, or where one can be truly enlightened with regards to Bitcoin, or is this just never-ending intellectual scavenger hunt, basically?
A good question. I mean, I would imagine it's forever, right? It's just like life is forever. We never had like, it's almost like a proxy for global consciousness. You have a blockchain that that is like heavy, truth, has a ledger that you can't mess with. And we've never seen that before. And so when you have that, because like it goes back to Larry Lepard, who's a good friend, he was on our pod once, and we had this conversation. What are you most excited for when Bitcoin wins or all that? And he had a really great answer. And what I was able to distill it down to is it was something I'm very excited for, is accountability being brought back, right? Because when you think about it, like depending where you go, service is just like a good proxy for that, where people just in the West, specifically in the US, just assume you need to leave a tip and all that. It's just like, and then you go to the UAE and certain countries, and they're the most grateful, absolutely incredible, like hospitality with no expectation. And in my mind, I see that as a proxy for accountability, because if you know you're going to get the money, then you don't give a shit how bad you treat somebody.
Yeah.
And so just imagine a world where we get back to that level. Like that in itself is just an insane kind of like, positive, and where comes from that. And we haven't seen that. Energy is another big aspect where you can kind of tie back to the petrodollar, and we've always needed this hop from energy into dollar back into something else. And it's something that doesn't get talked about a lot. And I don't know enough about it, but something I really want to research is this notion that there's no such thing as stranded energy. So now you have the unit that can be moved around, right? It's just a proxy for energy. Well, what does that mean from like wars and things that happen? There's all these just things that will change that aren't the same as the gold standard. Because the easy answer would be like, well, this is just like going back to gold, and we had that, but it's actually not the same, because gold had its own inefficiencies that this kind of fixes, similar to like finite scarcity on the internet, right? We talked about AI. Bitcoin probably keeps AI from killing us because it needs to be fed by energy. So you need the money. It keeps the, notion of proof of work, right? Because sats are sats. So you can, when in an infinite amount of data online, if you're familiar with like Highlighter and some of this stuff that's being worked on, where you can actually like aggregate, the amount of likes or interests. So rather than have SEO and ads get all the data that surfaces the top, the amount of money you spend, you can actually see proof of work based on the amount of interest somebody has as your proxy for actually like high signal. Like all these things, like the internet's fundamentally broken, right? We didn't have a unit to like tie all this stuff together. So it's a long way of saying basically like, I don't think this ever ends.
No, I think so either. But I thought it was just it's a fun question. I think it's also a good realization that I think this answer shows how early we still are, and that there's so much of the things that we can conceptualize right now. There's still some time that passes before we can actually see if that what we conceptualize will actually happen, right? And probably once that happens, we see other paths coming up that we can explore in an intellectual way, right? So it's kind of I see it in a similar way. It's kind of like a never-ending thing.
And that's why, like, I genuinely feel like the luckiest person. Like, I've been so like grateful the position we're in, and like getting to work with you more, your view and interests, because this is why I had to start the fund, because there's too many ideas. And so think about the stuff we're talking about. If it's right, and it is right, then, and you have the ideas, well, you can't do them all. You have to have focus, but you can assess and allocate, especially if you're building. And then you get to wake up and find the individuals. And like today was a bunch of stuff on insurance, that like just learning about insurance and the amount of things that like Bitcoin can fix relates. And that's just a different topic. But to your point, there's all these things that need to be worked on and fixed. And if you have that opportunity, again, it's like our money that we're investing in these companies, because what are you supposed to do with the money? Like if I sat on it, I'm almost convinced that I would lose it, because from the point of what we're talking about, like it just will flee. But if you go and put it to work and you're in the congruence of like where things are supposed to go, then it ends up turning into more money. And it just keeps happening. So I just made the point that we're just going to keep doing it. And so, it's going to be a fun time to get you more involved as well and see what we can look at. And you're seeing a different part of the world too. You have some interesting conversations with your networking group that I think once they get Bitcoin, they're going to build some really cool shit.
I think it's just super intellectually rewarding and entertaining at the same time, right? It's, I don't know, like I think about this stuff every day, and it never gets boring, and it's almost every day, at least every week, that I learn something new, right? Or like a new way to look at it, or a new idea for the future. That I think just that endeavor is already so rewarding and just so much fun. And I'm happy that we get to continue that also together in part. And so, yeah, it's just really fun. I think that's, for me, it's the answer. It's just fun. Doesn't feel like fully like a hobby. Doesn't feel fully like work or something. It's just like, this is what I do,
Yeah, it's the memes. Like, yeah, it's the memes you just said. Like, it's like work and fun. It's the notion of like, you get to like sit on election night. I'm just reeling off of that because I've just been so excited based on, everything that's happened here in the US the past 2 weeks. But you see it a little bit. I think Dylan's had some posts about, we're just memeing this stuff into existence. Like, imagine without Twitter,
100%.
Fair.
No.
So it's just like, it's so much fun. And then you get to see like these big influential people like Trump. Think about how insane Trump is, even before becoming president, but just going to the national conference, telling everybody like, have fun with all your Bitcoin. Like, it's just so insane. Yeah.
That's,
to your point, it's just,
Yeah, you said so. Yeah, I think I also tweeted that once, like, we are just memeing it into existence. I'm just scrolling back on my Twitter. I think I tweeted something about this. Well, I cannot really find it, but it's like, this is it. What I think is you're memeing it into existence, but it's also, yeah, I sometimes call it like a manifestation, right? Like, this was an idea by a single person or a group, whatever, and they let this idea loose into the world. And we, you, I, all the people that adopt Bitcoin, that talk about Bitcoin, that build on Bitcoin, we are manifesting that idea further and further and further into existence. And one of the elements, these memes, is just, this is what I wrote down. Like, if we just don't stop talking about Bitcoin, we eventually get to 10 million a Bitcoin. The only thing is, just don't stop. Just don't stop talking about it, because the problem is really clear. The maths, like it just works out. The debt will rise, the money will be debased. Like, there's not really an argument about that. And so if we think, and I think we can also prove and show and argue that Bitcoin is a solution to this, then, and eventually it is a narrative game, right? Like, I see the world is like a war of ideas, right? Eventually everything that you see was an idea before. Every policy was an idea before. It's a war of ideas. It's a war of narratives, because in narratives you share the concepts and you share the ideas. And so we have to just stay part of a conversation, have our own narrative. And when someone tests us on it, we actually have the ammunition to argue with them, because we understand what Bitcoin is.
That is a really great point you brought up, that I generally talk about behind the scenes that I don't get to talk about in front, is that if you have a good idea related to Bitcoin, it is more than likely an amazing idea and you should do it. If you have a good idea in the regular world, it's probably not that good of an idea. Somebody's already tried it and it just didn't work out. And so, like, it's a very big encouragement. Like, when I see something in a gap, I just go straight towards it, because I've already seen it plenty of times that, like, if it needs to exist, it just hasn't, because we're that early. And that's why. And you just see it all, like, and then especially if, to your point, if it's a positive version of what this all should end up, well, then, like, the universe has a weird way of rewarding you for those things. So that's like an interesting, like, you got to talk about it, but then you have to act on it when you feel it, and not because it's not like the rest of the world beats you up and says, you can't do it. It's not realistic. It's too risky. It's like, no. The risk is like actually not doing it, because you're going to wonder when this whole thing actually gets memed into existence.
Yep.
Why the hell you didn't actually do it? Because somebody else will do it.
Yeah. Well, the doing it is the manifestation, right? And the idea, is just the talk, basically. Like, ideas are cheap, right? There's an infinite amount of ideas in the universe. So ideas are cheap, and that is all talk. And I think that's funny, because I talk about Bitcoin a lot when I say, Bitcoin is the talk and the walk, right? We can talk our Bitcoin. We walk it because we have it, and we try to spend our energy and time on it to, well, feed the narrative, and share this idea further. But yeah, if Bitcoin, if the best reward to ever exist doesn't incentivize you to act on your ideas, then I don't really know what eventually will. So it's the perfect excuse to actually act on your ideas, if Bitcoin is the possible reward for you. There's no wrong in attempting, and the only thing you can do is fail, and then you learn, right? So that's, I see that in a very positive light.
Yeah. And there's the other part we've talked about is like, when you have seen like your skill set in a regular world and you know you're successful, it's one thing. But when you find the passion of like this whole thing, and you find the gap that you need to get involved with, the like superpowers that are unlocked are like undescribable. And I've seen this like time and time again, hiring for multiple companies in this space, helping people break into it. And then in our current companies, that like you get somebody from the traditional world that is always like operated at anywhere between 50 to 75%. And most people know this because when you wake up out of bed, you're kind of like a little groggy and a little just like, I got to go back and do this whole thing, versus the pep in your step when you wake up and you're just like wide awake, just like wake up just like a bolt, because you know you have so much shit and it's just there. And when you have that, like the level of like superpower is like undescribable. And so that's really like ties into what you're saying is like, if you have the idea, like what else are you going to do? And this is where like I kind of gain respect for people that kind of burn the boats and leave, where I talk to people about hiring and stuff. And like, I always love the people like, I'm like quitting either way. And I'll tell them like, cause I've had enough of these conversations, you know enough about somebody that does that, because the alternative is like, look, I have the golden handcuffs, I have the life and the family, because they have enough money to like take the chance, but they're just too sucked in that system of how they created for themselves. They can't make it. And I kind of feel bad because it's like, well, you're probably going to be 10 to 15, 25, whatever number of years. And that there's that, because it's the regret decision framework that like Bezos talks about, of like, he started the business because ultimately he could live with failing. He couldn't live with dying and realizing that he never tried it. And like, that's the angle of like, that's who you want on your team. That's when you build a business. Like those are the people you want, because when you're in a foxhole and you're doing it, and Cam Duty's a good friend and advisor of the fund. And his whole thing, if you've heard of like a Brickyard, you go to their studio in Chattanooga, and he has like a big pirate, kind of flag hanging from the deal, is because his whole deal is kind of like an early rider's theme, in that he brings all the people to Chattanooga. If he invests in them, they have to go in the middle of Tennessee and grind for like 18 months. That's his heuristic. And he has, the biggest, like big YC, Calcanus, all these guys send their people to him, because once they get the money, you got to go through the real pain and the real struggle. And Cam's been there building his businesses. And so that's who you want.
Yeah,
and you're like, Foxful is like, you want the people that are going to like be willing to like, kind of just again, burn the boats.
Yeah. Love that. All right. I want to ask you my two last questions. Yeah. Firstly, what is like a spiky point of view on Bitcoin that you have that not a lot of people share with you?
That's great that you asked that. It's probably going to kill, but no, I think the reality is I had a unique background being at the large firms that get a lot of shit, right? The Googles, the WeWorks, the YC-backed companies. And the reality is the best killers, the operational excellence hasn't got into the space. So by working and building it, I didn't see it. And it could be the same for us potentially, but the idea is that majority of the Bitcoin companies won't really exist in the future. There'll be net new companies that just run laps around the existing ones. And we kind of see that already. Like a lot of people have folded up. There's just a lot of like kind of other companies that haven't historically like thought about the operational scale and the real like version. And honestly, a part of that is it's from an entrepreneurial perspective, but then there's also the component of the total addressable market, right? Like it goes back to the venture side. So like in traditional venture, basically the easiest way to put it is a lot of the Bitcoin companies that exist today are not necessarily Bitcoin companies. They're venture companies with a Bitcoin theme. And what that means is that you raise the money and then you kind of grow at all costs. And when you grow at all costs, well, Bitcoin is that version of the canary in the coal mine where it's the business cycle accelerated. So you can't grow at all costs, take that venture money, hire all the people, because you run when the market runs and then it cuts in half. And now you're stuck with all the people and you got it too far outside. And so, that's why we've been very intentional with how we hire and what we do. And then also having multifaceted individuals, because everybody can speak about our business in the way we can. Because one of the things I learned from building the space is you ultimately have to hire a bunch of salespeople when you're running. And then when the market cuts in half, well, now you got to either lay them off or you basically have to eat that capital outlay. And these are like concepts that I don't think people still yet have even recognized. So hopefully that's like a little bit meat there without being too harsh.
Yeah, that's nice. I think that's a good insight. And also I think part of it, right, because eventually any attempt at a startup is a big experiment in a new space. As we talked about before, I think there's a new way or a different way of approaching it that aligns also very much with Bitcoin, which could be a better success indicator than like the general or classic approach to business building. But again, it's something I think we'll have to see that kind of like plays out over time as to like where that goes and what the results will be. But I think that's part for me of the just how exciting it is. Like as you said, probably the best founders in Bitcoin aren't even there yet. So I think that's just again just something to look forward to.
Yeah, it reminds me of something that Parker also says is like about Bitcoin and being it's like opaque. I'm going to butcher it, but it's this notion of like seeing through the fog and you see a painting on the other side, but it's opaque and you can't see it. And then it becomes clearer and clearer, and it becomes it's not intuitive until it becomes hyper intuitive. And these concepts of like the multi-institution custody or the early rider themes are very similar to your point of like you're seeing through the fog right now, but like when you get to the other side of it, it becomes hyper intuitive because you start to realize there actually is no other way for it to go. Right? Because it's like, well, what are you going to go back to the unit of the dollar? And then how do you return that if it's inflating? And then how do you build a business with the dollar that's inflating? And then why should 90% of all businesses fail? Because that's not like incongruence with anything that's like destroying capital. And maybe in reality, it's actually inverted. It should 10% of businesses fail and 90% succeed, because the only reason, and this is how I thought about building Onramp, is, well, there's a 10 to 20% chance that we fail because it's just execution, all the things, but you actually can build a nice, sustainable cash flow positive business. And then the upside is the enterprise value and a venture type upside. And that's how we look at like an underwrite early writers deals. Like the downside is that it just completely misses the mark and somebody gets hit by a bus. Something like crazy happens, but the reality is that there is product market fit here. It's just how big it is. So you have the downside protection of returning your Bitcoin with the upside of the enterprise value. And the way I liken this is to like a child. Like you don't know if the child's going to be Michael Jordan, if they're just going to play high school basketball. You have no idea. All you can do is foster like them getting to that stage. And then the universe takes off into whatever direction. So if somebody maybe you thought was just going to play high school basketball turns into Michael Jordan, the person you thought was going to turn into Michael Jordan turns into high school basketball player, both are positives, but you just have to do it versus like, well, you don't plan for one to die or 9 out of 10 to die, right? It doesn't make sense. And these are just concepts that like, once you get to the other side, just like Bitcoin, it becomes hyper intuitive. And you're like, yeah, like this is how it's all going to be done in the future state. And then you just run towards it, just like Bitcoin.
Yeah. Yeah. I love that. I think that's a very good add-on. Okay.
It's actually just one thing to add. It's okay. No, go ahead.
No, go ahead.
I was just going to say it's very similar to the notion of multi-institution custody, where it's the thing that a lot of people are seeing it, but it's still like, where does it fit in the landscape? And going back to that like analogy of the hyper intuitive, when you look at the market, and this is what I did for basically half a decade now, sounds weird, building infrastructure in Bitcoin. You have the two sides of the custodial situation, which is also why Bitcoin's only a $2 trillion asset and should be 10 trillion, is nobody knows how to allocate meaningful capital and not feel like they're going to get rugged. Because the two options are, I'm alone on an island with self-custody and I have to have all the things associated. And in reality, a lot of wealthy people will not come in that way. The alternative is I'm going to give it all to Coinbase or a firm like Coinbase. And if anybody studied Bitcoin long enough, we know centralization isn't the way. And so Brian, our chief strategy officer, is really, has a really good knack for distilling concepts. And he basically said, until multi-institution custody exists, you cannot say you didn't have a single point of failure, because you can make up reasons why it doesn't work, but you can't say that one thing happens and you're out of the game. Where in both sides, self-custody, the other side, if you fuck it up, the assets are gone. And so that ties into the end state of like where it becomes hyper intuitive, like this is the end game. And then the rest of the market catches up. And that's why we're kind of like seeing the success with the business.
Nice. All right. Now really the last question. I ask everyone the same question, which is, what is a core belief that you will never let go?
That all the value and like a majority of value and insights to create will always be paradoxes and not intuitive. They will be contrarian, basically. Like, I think what I've learned about what we're doing here and in Bitcoin and like seeing society is that like all the alpha it's almost in the pain. It's almost in the notion of like the learnings, that it's the earned secrets, right? And then the market catches up and you will them into existence. And then everybody says, oh, that was how it was always going to be done. Similar to Bitcoin when we look back at it, but nobody will talk about all the pain and nobody's telling them they're crazy. And I think that's like, the thing that I've learned is like the real value and the real insights is like, it's the journey. It's not the end state. But yeah.
Yeah. Yeah. I love that. I think it's a nice summary of this conversation. Is kind of like act on the information asymmetry that is in front of you, right? It's doing that, taking action on that is, I think, what always will be rewarded in that sense. So yeah, man, thanks so much for sharing. Thanks so much. 90 minutes, great riff. And yeah, we'll talk soon.
I appreciate it. I can't wait till we get together in person, maybe doing a live one with the team. Hopefully we'll get to do that sometime either. Probably the end of the year is already upon us. So 2025, we'll have to figure it out.
100%. We'll figure it out. All right, man. Thanks.
Thanks, bro.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for our next episode. Bye.